Hi, I want to make this quick video today because I just wanted to share my thoughts on seeing a lot of market dips. Of course, with Tesla, something I'm invested in, a lot of other tech companies, and really mostly the market in general. Seen some of those high growth stocks from the end of 2020 in the Biden inauguration get uh, lose some grounds. Of course, those grew a lot under the Trump administration too. But a lot of the tech stocks or renewable energies or electric cars, batteries, charging, other tech, just taking a dip. And I think the most important thing to do, from my perspective, which isn't financial advice, is to hold steady, not try to cut your losses, is what I'm doing personally. And every person's situation is obviously different, but it's important for me to know that I can ride out the storm, because this is a natural occurrence, within the market, where there could be dips or temporarily setbacks. But you could see periods 3 months ago, 6 months ago, 9 months ago. You'll go through your periods of ups and downs in its cyclical nature, where people say the market's overheated. A week from now, we could be talking about the opposite story, where there's an amazing surge or amazing rebound and the markets are up. Or next week, it could be a total dismay, it could be a total crash, could be extension of the coronavirus, could be renowned concerns about unemployment, etc. So the most important thing is, for me, just to hold steady, look for opportunities to reinvest, to profit within the circumstances. Right now, if I didn't have certain money invested, that money would be perfect in order to take advantage of the situation, in order to simply make higher profit yields given the market correction, or whatever you want to call it. Given that circumstance, this would actually be an ideal time for me to look into things that I wanted to buy in order to increase my profit. So it's really not, of course, depending on liquidity, depending on needs of financial access. It's something that it just is what it is. It's just part of the natural order of how that stock market works, and it takes that kind of, I think, for me, level of steadiness to kind of be like, well, if you're gonna accept the highs, you have to accept the lows, and you got to kind of ride it out and be confident in the long term, and not kind of look at simply the dollar figure value right in front of you in terms of what's going on. And of course, these are also fundamental analysis, so you can't, it's more difficult in some circumstances if it's something like Bitcoin or something like that, where I'm not saying that same suggestion doesn't play out, but for instance, I had bought AMC stock, and that to me was more of a long-term concern or risk than anything that's going on with all these other stocks. It seems not even close to parallel, because AMC, it's a company that has no certain future in a lot of these other stocks. It's pretty much likely inevitable that they will rebound and probably even go well beyond their current evaluations. So there's stuff like AMC, which looks to be surging a bit right now, which is great, and maybe there's the squeeze going on, which is awesome. If not, that's okay, but that stuff is more like that was bringing me a little more concern in terms of what I invested there than anything else that's going on right now, simply because those other kind of stocks, fundamentally, whether it's like Apple or Tesla or LiDAR stocks or charging stations, anything else like that is likely to get over this short downward trend.